If you are 60 or older and you have money sitting in a bank account right now, there is a federal program called the Senior Safe Act and a separate bank compliance rule called SAR, Suspicious Activity Reporting. And together they are responsible for thousands of senior accounts being frozen every single year, without a single phone call to the account holder first. The average time it takes to unfreeze a wrongfully frozen senior account is 47 days. 47 days without access to your own money. By the end of this video, you will know exactly which transactions trigger a freeze, what your bank is legally required to tell you and what they are not, and the specific steps you can take right now that can cut that 47-day wait down to a single phone call. This is not about doing anything wrong. This is about understanding a system that was designed to protect seniors, and in many cases ends up trapping them instead. Before we get into it, I want to ask you something. The federal banking compliance rules I am going to walk you through today, they change. The Consumer Financial Protection Bureau updates its guidance. The FDIC revises its elder financial exploitation protocols. Banks update their internal flagging systems. The CFPB does not call you when those rules change. Your bank does not mail you a letter. What I do on this channel is track exactly those updates and translate them into plain language that you can actually use. The people who are subscribed find out in time to act. The ones who are not subscribed tend to find out when they are standing at a pharmacy counter, debit card declined, calling the 1-800 number, and sitting on hold for 2 hours while their prescription sits behind the counter. That is a real moment. It happens. Hit subscribe, turn on the bell, and let's get into it. Number 1. The $10,000 rule that is not actually $10,000. Most people know that banks are required to report cash transactions over $10,000 to the federal government. That is called a Currency Transaction Report, or CTR. It is required under the Bank Secrecy Act, and it has been in place since 1970. What most people do not know is that $10,000 is not the real trigger. Banks are also required by law to file a Suspicious Activity Report, ASAR, when they observe behavior that looks like it could indicate financial exploitation or structuring, even if the amounts are far below $10,000. And here's where seniors get caught. Imagine this. You decide to take out $3,000 in cash to pay a contractor doing work on your roof. You do not trust sending a check to someone you just met. That is reasonable. You have done nothing wrong. But your bank's algorithm flags it. You withdrew $3,000 in cash. You are over 70. It is outside your normal pattern. The algorithm does not know you have a contractor coming. It knows a deviation from your history, and it is trained to treat deviation as a potential red flag for elder financial exploitation. ASAR gets filed. In some cases, not all, but some, your account activity gets restricted or frozen while the bank investigates. You do not get notified ASAR was filed. That is federal law. Banks are legally prohibited from telling you ASAR exists, so you have no idea why your card is not working. The action step here is simple. Before any cash withdrawal over $2,000 that is outside your normal pattern, call your bank, 1-800 number on the back of your card, and tell them what you are doing. I am pulling out $3,000 cash to pay a contractor this Thursday. That one phone call creates a paper trail inside your account notes. It does not stop the algorithm, but it gives the compliance officer a reason to clear it quickly instead of sitting on it. Takes 3 minutes, can save you 47 days. Number 2. The Senior Safe Act was meant to protect you, and it can also delay you. In 2018, Congress passed the Senior Safe Act. The law gives bank employees immunity, meaning they cannot be sued, for reporting suspected elder financial exploitation to Adult Protective Services, law enforcement, or other agencies. The intent was good. The result is that banks now have zero legal risk for reporting you, and significant legal risk for not reporting when they should have. That imbalance matters because it creates an incentive to over-report, over-flag, and over-freeze. The bank's legal exposure for freezing your account incorrectly is essentially zero. Their legal exposure for missing a real exploitation case is not. So what does this mean for you? It means if you are receiving large transfers from family members, if you are moving money to pay for home care, if you are gifting money to grandchildren, or if you are withdrawing money to loan to a family member, any of those patterns can trigger a Senior Safe Act referral to Adult Protective Services without your knowledge. Picture this. Your daughter lives out of state. She is helping you cover a medical bill. so she sends you $8,500 from her account into yours. Normal family transaction. But your bank sees an $8,500 incoming wire from a non-joint account holder to a senior customer, and it gets flagged. Adult Protective Services receives a referral. In some states, that referral can come with a temporary account hold while they verify your well-being. You find out when your automatic mortgage payment bounces. The action step. If you are going to receive or send a transfer over $5,000 that involves a family member or caregiver, document it in writing first. A simple signed note between you and the other party, stating the amount, the date, the reason, gives Adult Protective Services exactly what they need to clear the referral in one call instead of 6 weeks of investigation. Almost nobody does this, and almost nobody knows they need to. Number 3, your rights at the moment of a freeze and what your bank will not volunteer. Federal law does not require banks to give you advance notice before freezing your account for suspected elder financial exploitation. But once a freeze occurs, you have rights, and your bank is not required to walk you through them. Here is what you are entitled to. First, you have the right to request a written explanation of the freeze reason within a reasonable time frame. It will be vague. Banks cannot disclose SAR details, but you can request a general reason in writing, and getting that document starts the clock on resolution. Second, you have the right to contact the CFPB directly. The Consumer Financial Protection Bureau has a dedicated elder financial exploitation complaint line. The number is 1-855-411-2372. If your bank is not responding to your freeze inquiry within a reasonable window, a CFPB complaint accelerates bank response significantly. Banks take CFPB complaints seriously. Third, you have the right to contact your state's banking regulator independently. Every state has one. You can find yours at fdic.gov. Filing a complaint at the state level while simultaneously filing with the CFPB doubles the pressure on the bank to resolve quickly. Here is the human moment. You wake up on a Tuesday. You go online to check your balance, and the account shows restricted. You call the 800 number. The representative reads you a script. They say they cannot provide information due to a review in progress. They say it could take up to 45 business days. You ask to speak to a supervisor. The supervisor reads you the same script. Most people stop there. The people who know to call 1-855-411-2372 and file a CFPB complaint the same afternoon, their accounts are often released within days, not weeks, because the bank now has a federal regulatory complaint attached to the file. That one call, 10 minutes. The difference between 45 days and same week resolution. Number 4, joint accounts and POA, the protection most seniors skip. A power of attorney is a legal document that gives another person the authority to manage your finances if you are incapacitated or unavailable. You have probably heard of it. Here is what most people do not know. A power of attorney, even a perfectly valid one, does not automatically give your authorized agent access to your bank account during a freeze. Banks can and do require their own internal authorization forms, even when a valid POA exists. If your bank does not have your POA on file, registered, verified, and accepted by their legal department, your agent can be turned away at the door. Specifically, Bank of America, Wells Fargo, Chase, and most major institutions require you to submit your POA for review and approval before it becomes usable at that institution. Some require their own proprietary form in addition to your legal POA document. The scenario: you are in the hospital after a fall. Your son has your power of attorney. He goes to your bank to access funds to cover your medical expenses. The bank tells him they have no record of the POA and they need 3 to 5 business days to review the document. Your account is also flagged because of unusual inactivity. You are in the hospital. You cannot call. He cannot access $1. This is not rare. This is the system working exactly as designed, just not for you. The action step: call your bank this week. Tell them you want to register your power of attorney on file. Ask specifically whether they accept your state-issued POA or require their own supplemental form. Get the answer in writing or via email. Do this for every financial institution where you hold an account. It takes one phone call per bank. It can be the difference between your agent having same-day access and a 3-week legal standoff during a medical emergency. Number 5, and this is the one that takes 10 minutes and can permanently protect your account from the most common freeze trigger: behavioral profiling. Every major bank and most regional banks now use automated behavioral monitoring systems. These systems learn your spending patterns over time. They build a baseline of what your account activity normally looks like: typical withdrawal amounts, typical merchants, typical days of the week, typical geographic locations. Any deviation from that baseline, particularly for customers over 60, gets scored. Score too high and the system flags it for human review. High enough and it triggers a restriction automatically before a human even looks. The fix is something almost nobody uses but every bank offers. It is called a customer profile note or account preference note, depending on your bank. It is an internal notation in your account record that documents your normal patterns and any anticipated deviations. You call your bank, again the number on the back of your card, and you say this exactly: I would like to add account notes documenting my typical transaction patterns and any upcoming large or unusual transactions. Tell them your typical cash withdrawal amount, your typical monthly spending range, any recurring large payments, property taxes, insurance premiums, contractor work, any family members who regularly transfer money to or from your account, any upcoming travel that will trigger out-of-state or international transactions. When that information is in your account record, the compliance officer reviewing a flagged transaction has context. Context leads to clearance. No context leads to a freeze while they investigate from scratch. This is not a guarantee, but it is the single most effective thing you can do right now to reduce your risk. Most seniors have never been told this option exists. Most bank employees will not offer it unless you ask. The option is there. Almost nobody uses it. Here is what we covered today. The $10,000 threshold is not the real trigger. Cash withdrawals in amounts as low as $2,000 to $3,000 that deviate from your pattern can generate a suspicious activity report and restrict your account. The Senior Safe Act gives banks immunity for over-reporting suspected exploitation, which creates an incentive to freeze first and investigate later. If your account is frozen, you have rights, including the right to file a CFPB complaint at 1-855-411-2372, which can cut resolution time from 45 days to days. A power of attorney only works at a bank if that specific bank has your POA on file and accepted. Call each institution this week to confirm. And the most underused protection available right now is a customer profile note, your account record, a 10-minute phone call that gives your bank context before a freeze ever happens. Share this with any senior you know who has a bank account. Share it with adult children who manage finances for a parent. One conversation about these 5 steps can prevent a financial emergency during a medical crisis. Subscribe. Pass this to someone who needs it. I will see you in the next one.